Hi everyone, Khrunal here from Loan Market.
And it's Hillz from Together Financial Services.
And today we're diving into a topic that a lot of homeowners ask us about: how to use your equity to buy an investment property.
Khrunal, that's right. But before we get started, just a quick note. What we're sharing today is general information only, not financial advice. Everyone's situation is completely different, so please, it's really important to get personalized advice before making any decisions.
Hey, that's absolutely correct. So let's start with the basics. A lot of people think, I've got equity in my home, I can just use it. But that's not exactly how it works. To actually access your equity, you need to borrow against it, which means taking out a new loan or actually topping up your existing loan.
Exactly. So what is equity? Well, equity is simply the difference between the current market value of your home and how much you still owe on your mortgage.
So let's put it into an example for you. We once had a client whose house was worth $800,000. They still owed $400,000 on their loan. That meant they had $400,000 left in equity.
But Khrunal, here's the key. You can't always access all of that equity. In fact, most banks will only allow you to borrow up to 80% of that property value without paying lenders' mortgage insurance. So in this case, 80% of $800,000 is $640,000. If you already owed $400,000, that means you could access up to $240,000 in usable equity.
And that's exactly what they did. They wanted to buy an investment property, and that $240,000 was enough to cover the deposit, costs for a second home, and also stamp duty.
Now, I'm sure, Khrunal, people often ask, what would the repayments look like? So, to keep it simple, let's look at it based on an interest rate of 5%. On $240,000, that works out to about $12,000 in interest a year, or about $1,000 a month.
Now that does sound amazing, but of course that's only the interest only portion of things as well. Depending on whether it's interest only or principal and interest, your repayments could look a bit different. But this gives you an idea of what the borrowing costs might look like.
Completely right, Khrunal. The good thing is, if the investment property is rented out, the rent can often cover a big portion of these costs. Plus, there might be some tax benefits depending on your situation.
Exactly, but it's important to remember, just because you have equity doesn't mean you should use it. You need to look at whether the numbers stack up, what the cash flow looks like, and what your actual long-term goals are as well.
And that's where we can come in. We can sit down with you, we can run through all the numbers and help you figure out whether using your equity to invest actually makes sense for you.
So if you're sitting at home wondering whether you could use your property to kickstart your investment journey, reach out to us. We'd love to help you explore your options.
Thanks everyone for watching. We'll see you in the next video.
Catch you next time.
Loan Market. Make it yours.